Some of the biggest institutional players in crypto are calling Chainlink one of the most undervalued infrastructure bets out there. So today, we're going to break down exactly why they think this project could be the crucial bridge between old school finance and the new world of blockchain.
So that really brings us to the big question we're tackling today, right? Are we actually looking at crypto's most undervalued piece of infrastructure? Let's dig in and find out.
Okay, first things first. To even begin to understand the whole undervalued argument, we need to get a really clear picture of what Chainlink is and what it does, because this is not just another crypto coin. At its core, Chainlink is what's called a decentralized Oracle network. Now, I know that sounds super technical, but the idea behind it is actually pretty simple. See, blockchains by design are like these super secure, isolated vaults. They can't just go and look up information on the internet. They need a totally secure way to bring outside data in. And Chainlink, well, it's the trusted messenger that solves exactly that problem. And honestly, this is the best way to think about it. Just picture a secure bridge. On one side of the bridge, you've got the isolated world of blockchains and smart contracts. And on the other side, you have, well, everything else. All the data from the real world. Stock prices, sports scores, weather reports, you name it. Chainlink is that essential bridge that connects those two worlds securely. So now that we have that foundation, let's get to the key development that has Wall Street really starting to pay attention. This is where the story gets good. The huge news here is a major expansion of its data feeds. Chainlink can now deliver data for US stocks and ETFs, not just when the market is open, but 24/5. That covers everything from pre-market trading all the way through to after hours. For the world of decentralized finance, or DeFi, this is an absolute game changer. So why is this such a massive deal? Well, because it unlocks a whole new universe of possibilities for DeFi. We're talking about the ability to trade tokens that represent real stocks like NVIDIA or the SPY, 24 hours a day, directly on the blockchain. This opens the door for creating complex derivatives, new kinds of synthetic markets, all kinds of new financial products that blend the speed of crypto with the stability of traditional markets. It's a huge step forward. And let's just talk about the scale here for a second. The potential market that Chainlink is now building a bridge to is worth an estimated $80 trillion. That's trillion with a T. That's the size of the entire global stock market that could theoretically be plugged into the DeFi ecosystem. A number that big, well, that alone explains why the big institutions are so interested. So, who's actually putting their money where their mouth is on this whole idea? Well, while the wider market's been pretty shaky, on-chain data shows that some very, very big players, the whales, are making some serious moves. And you don't have to take my word for it. This quote from Matt Hoogan, who's the CIO of the big asset manager Bitwise, he puts the institutional case very plainly. The market just isn't getting it yet. He sees Chainlink as absolutely critical infrastructure, and he believes its price just doesn't reflect its real fundamental role in the space. And that creates this really fascinating split in the market. It's like a tale of two different mindsets. On one side, you have the short-term sentiment, people reacting to daily price swings and market dips. But on the other side, you've got this long-term accumulation happening. The so-called whales are strategically buying, not based on the daily noise, but on the underlying technology. They're making a bet on the long-term structural value. Okay, so this is the crucial part, right? How do we square this massive long-term potential with the actual price we're seeing on the charts today? Let's take a look at the current market dynamics. The reality right now is that even a strong infrastructure play like Link isn't totally immune to what's happening in the broader market. Its price is definitely feeling the pressure from the wider crypto correction. And this is where that short-term sentiment kicks in, with traders watching key technical levels like that $15 mark and speculating on what a potential ETF might do. So this really leaves us with a few different roads forward. The bullish case, the green light scenario, that pretty much hinges on widespread adoption of what are called real-world assets. So tokenized stocks, bonds, that sort of thing. The neutral case is where its tech gets used a lot, but there's no single big event to really move the price. And then, of course, the bearish scenario involves that selling pressure continuing, and maybe retail investors just overlooking these quieter infrastructure projects. So when you boil it all down, here's the main takeaway. Chainlink is not playing the typical altcoin hype game. It's positioning itself to be the essential fundamental plumbing for a future where traditional finance and DeFi merge. But With any deep infrastructure play, it can take a long, long time for the market price to finally catch up with the fundamental value that's being built underneath. Which really just leaves us with one final massive question. As Wall Street and crypto get closer and closer, they are absolutely going to need a secure, reliable bridge to connect them. The big bet that these institutional investors are making is that Chainlink is that bridge. So the only question left is, will the future of finance be built on it?